Internal Revenue Service IRS Tax News. National Taxpayer Advocate Erin Collins delivers her first report to Congress, identifies COVID-19 challenges, CARES Act, and Taxpayer First Act implementation as priority issues for taxpayers. IR 2020-132, June 29, 2020, Washington. National Taxpayer Advocate Erin M. Collins today released her first report to Congress. There's a link to that report here. There'll be a link to this in the description, identifying taxpayer challenges arising from the COVID-19 pandemic, the Coronavirus Aid, Relief, and Economic Security CARES Act, and the IRS's implementation of the Taxpayer First Act as priority issues the Taxpayer Advocate Service, TAS, plans to focus on in the coming year. The report also assesses the 2020 filing season, identifies other TAS areas of focus, and includes the IRS's responses to administrative recommendations proposed in the National Taxpayer Advocate's 2019 annual report. Quote, on March 30th, 2020, I had the honor and privilege of being sworn in as the third National Taxpayer Advocate, end quote, Collins wrote. Quote, starting in the midst of the pandemic and witnessing IRS offices closing one by one was not the way I envisioned my role when I accepted the position. But there also has been a silver lining in this experience, as I have participated in conference calls with members of many leadership team, TAS employees, and IRS's COVID-19 response team. I have been extraordinarily impressed by the commitment and focus on the health and safety of all employees during this pandemic, while still doing as much as possible to assist taxpayers, end quote. In her preface to the report, Collins expressed appreciation to Nina Olson, who served as the National Taxpayer Advocate from 2001 to 2019, and Val Overson, who served as the first National Taxpayer Advocate from 1998 to 2000. Quote, over the past 20 years, TAS has successfully assessed more than 4.5 million taxpayers by helping them resolve their tax problems and protecting their rights, and it has made hundreds of administrative recommendations adopted by the IRS and some 45 legislative recommendations enacted by Congress, end quote, Collins wrote. Taxpayer challenges arising from COVID-19 pandemic. The report praises the IRS for acting quickly to postpone over 300 filing, payment, and other time-sensitive deadlines, provide broad relief from compliance actions under its, quote, People First initiative, end quote, and disperse some 160 million economic impact payments, EIPs, authorized by the CARES Act enacted on March 27, 2020. However, the report says that despite the IRS's best efforts, there have been notable adverse taxpayer impacts, including taxpayers who filed a 2019 paper return and are entitled to refunds may be in for a long wait. The IRS had to suspend the processing of paper tax returns, and as of May 16th, it established it had a backlog of 4.7 million paper returns. So we've been saying they've been putting out reports every so often saying, hey, look, we really want to get the electronic returns filed. They've been looking for that for a long time. But obviously with the social distancing, the paper returns, they might not have the employees to be processing the paper returns. And of course, as we can see, they're backed up here, back to the text. Although the IRS is reopening some of its core operations, it is not clear when it can open and process all the returns sitting in mail facilities. Some taxpayers whose returns were mistakenly flagged by IRS processing filters are experiencing lengthy delays in receiving their refunds. All tax returns claiming refunds are passed through filters designed to detect, identify theft, and other types of refund fraud. As TAS has documented, some of these filters produce, quote, false positive rates, end quote, of more than 50%, meaning that more than half the taxpayers whose returns are stopped by certain filters and entered to the refunds that are entitled to the refunds they claimed. Affected taxpayers are often asked to mail in documentation to substantiate their claims, but the IRS has not opened or processed many of their responses, delaying their refunds. Refund delays can have a significant financial impact on low-income taxpayers, as refunds often constitute a significant percentage of their annual household income. Notably, some of the refund delays have been generated by claims for earned income tax credit or additional child tax credits. And those are some of the refundable credits. So those are the types of credits that typically that will affect low-income taxpayers. So the credits that are important to get the money out there sooner, most likely for cash flow. However, there are also some of the credits that can be a little bit more difficult, given the fact that how those basically credits are going to be set up, and the fact that they are refundable could lend to problems related to fraud and whatnot. So they might have some different checks related to them, and they could be generating some false positives, which are delaying some of that process. So it looks like they're working in on that. Back to the text. Taxpayers who have needed help from the IRS have had difficulty obtaining it. The IRS shut down its accounts management telephone lines, so taxpayers could not reach a live assister by telephone. So they cut down the telephone lines, and they wanted to basically do everything through the website and through other means other than the telephone. Again, part of the reason that we've seen in the past from some of the news releases was that this was due to the social distancing and whatnot. But obviously, some people, especially want to talk to someone. It might be easier in some circumstances, of course, to get information to talk to someone rather than going to some of the other sources. So that's been a problem for many people. Back to the text. The IRS shut down its Taxpayer Assistance Center, making it impossible for taxpayers to obtain in-person assistance. So that would be another source. Again, a lot of people just really would like to go and converse with someone about the issue and help them with it. And obviously, more and more, the IRS is pushing people just go look at the website and use these other tools and resources. And then again, with the social distancing and whatnot, obviously these places were shut down more, so there's less kind of interactive assistance that is really not good for some people that really need that, and for those types of situations where they're outside of the norm. Back to the text. The IRS has also shut down its mail facilities, so it was unable to log or process taxpayer responses to compliance notices. The only resources readily available were irs.gov and automated telephone lines. The IRS has begun reopening its operations, but it will take some time before they are restored to full capacity. IRS system prepared over 20 million notices during the pandemic that could not be mailed due to closure of Notice Production Center between April 8th and May 31st. The IRS is mailing these notices now. However, some collection notices bear old dates and include response deadlines that often have passed. The IRS plans to include, quote, inserts, end quote, with these notices explaining that response deadlines have been postponed, but the report expresses concern that receiving compliance notices with response deadlines that have passed will be confusing and concerning to many taxpayers who may not read the inserts. So in other words, they got old letters they haven't basically set out. They've got deadlines on when the response rates and what's the actions going to happen, it looks like, on those letters. And of course, they haven't been sent out, so they need to extend the deadline given the fact the letter wasn't sent out and they can't really have a deadline date on it. And so they're going to put these other little pamphlets in there to say that, hey, the dates have been adjusted instead of reprocessing all the letters. But some people might throw away the little the added note that's in there as just added stuff and look at the letter itself and then be concerned about the dates. So that's a concern that they have, it looks like. Back to the text. Taxpayer challenges relating to the CARES Act. The report says that the IRS generally did commendable job implementing the CARES Act, but taxpayer challenges remained, including individuals who did not receive some or all of their EIPs, economic impact payments, may have to wait until next year to receive them. And that's because, once again, the earned income payments were based on 2020 returns, which aren't going to be filed, of course, until 2021. So it's basically a prediction of what's going to happen based on this new law that's tied to 2020 taxes that aren't going to be paid to 2021, which they're sending out now. Now, it should be a simple calculation, so it should be right in most cases because it's pretty straightforward. It's not too many factors involved in it. But of course, if there is a problem with it and you got an economic impact payment that is too low, and the point of it is to get cash out in the now at this point in time, then it could be that people will not have until they file their tax return next year to rectify that problem. And so that's kind of an issue. I mean, it would be nice if they could, if the whole point was to get the money out there faster, if they could solve the problem if they are due more money in a faster way. So, and they did put together tools to address these items that could affect the economic impact payments. But if people haven't acted by the time that those tools were implemented, by the time the checks went out, then those tools expired, and so now we're at that point. So they did try to put something in place, but again, they wanted to do that before the checks were processed. Once the checks were processed, then the idea was that, well, that it's too late now until you actually file the tax return. But it's possible that they could go back in there and say, if you tell us now, we'll try to give you the money, get you your economic impact payment or the difference before, next year. So anyways, back to the text. To date, the IRS has taken the position that most taxpayers who did not receive their full payments must wait until they file their 2020 income tax returns to claim the amounts as credits against their 2020 tax liabilities, even though there's no legal constraint on the IRS's ability to issue additional earned income payments, EIP, amounts as advance refunds during 2020. Congress enacted the CARES Act both to provide emergency financial relief to taxpayers on an individual level and boost spending on the national level. And note, that's basically the two reasons that you have these kind of payments oftentimes, because it's kind of like a stimulus payment. So Congress enacted the CARES Act for both provide emergency financial relief. I would think in this case, the CARES Act or this economic impact payment was more for economic financial relief other than what oftentimes these economic payments are designed to do, which is to boost the spending at the national level. Why? Because they think it's going to jumpstart the economy, and the economy will jumpstart. That's less likely to be the case when the entire economy is shut down because of social distancing. So it's less likely that pumping money into the economy is going to increase spending levels at a time when the economy, there's nowhere to spend it in. A lot of the businesses are closed. But it's there. So I would think this one is a little bit more unusual than prior kind of programs such as this, where it's really provided for emergency financial relief to many people, possibly would be more the primary objective. And that would still mean that they would want the economic payments out sooner rather than later. So it'd be nice then if they could try to get this money out sooner rather than later for that reason, is the argument it looks like it's being made here. Back to the text. TAS will continue to urge the IRS to provide full EIP, economic impact payments, to eligible taxpayers through 2020 as rapidly as possible. The report says that making taxpayers wait until next year to receive their EIP, economic impact payments, harms the affected taxpayers and is inconsistent with Congress's original intent. And that kind of makes sense. I kind of agree with that. It is, the intent is to get the money out there. However, they did put a lot of measures in place to try to do that, but they wanted to try to do that before they sent the payment out. And then, of course, their thought process was we're going to get the payments out as best we can, and then we'll fix everything, any kind of adjustments that need to be adjusted by the filing of the 2020 tax returns. However, they did put together tools that were able to kind of address these problems before the checks went out, and it seems like they might be able to apply some of those same tools to have additional checks go out, even though that might be a lot of work. So that would be I think the argument, right? They could use those same tools to say, hey, here, you can still use these tools even though the check went out, and then possibly try to implement that back in place. So maybe they'll do something like that. We'll see. Back to the text. Employers are struggling to determine whether they qualify for the Employee Retention Credit, ERC, and in what amounts. The ERC is a complex, refundable tax credit that requires employers to determine when a trade or business was fully or partially suspended by government order, the employer's number of full-time employees, what constitutes qualified wages, whether a business's operations post-COVID-19 are comparable to its pre-COVID-19 operations, and the application of aggregation rules. To address these complexities, the IRS has provided considerable guidance regarding when and how to claim the ERC. However, several areas require further clarification. If clarity is not provided, taxpayers will be more likely to make unintentional errors, increasing the risk of an audit. Having to untangle these issues is an audit environment would drain the limited resources of both the IRS and the business affected by the COVID-19 pandemic. TAS will continue to advocate that the IRS further clarify the rules governing when and how employers should claim this credit. So again, this was another credit that they're gonna put out there to try to stimulate the economy to some extent, but also try to basically maintain employment levels. And it's a bit complex. Again, it's a law we haven't really seen before, so they kind of put it out there pretty quickly. And anytime they're going to put something out there very quickly, it's quite likely that it hasn't been, vetted to the point that it could have been in the past. And since we haven't seen this in the past, we haven't really done this particular thing. It's quite likely that it's not. People are going to have questions about it. So more clarity is always a good thing on how to implement that credit, because of course it is true that if there are problems with it and it leads to more audits and whatnot, then that's just going to take up time and money. That if it was more simplified and streamlined and the questions could be somehow answered a little bit more clearly, then that would be a better thing to do. So back to the text. Businesses are facing challenges when seeking to utilize the CARES Act provision that authorizes the use of net operating losses to offset taxable income in prior years, and in some cases to receive refunds. So again, another kind of effort that we could have is to basically take the losses, offset them to prior years and in the current years, and again that could lead to more cash flow in the current year, and more cash flow could lead to hopefully stimulating the economy once the economy's open, the business is able to be stimulated by being able to grow and whatnot. Back to text. For businesses to determine the optimal application of the CARES Act provisions so they can exercise the right to pay no more than the correct amount of tax, they may need to create and run complex financial models involving multiple tax years. So obviously when you have this kind of complexity in terms of now you got a loss, should you take it backwards, or should you push it forwards, and when should you take the loss? There could be a lot of factors involved in that, and then you start getting into the complexity of the models to see which of the methods would be best. And then of course you're paying a lot in terms of just running models, because you're going to be working in order to run models effectively. You would typically need someone that knows what they're doing, a good CPA firm to be able to run those models, and that gets costly as well to see what your best option would be. So back to the text. The report says the IRS has provided timely guidance in the form of frequently asked questions, FAQs, but it expresses concern that frequently asked questions are not authoritative or binding on the IRS. So the frequently asked questions are things that basically the IRS has gotten questions of and they've responded to them. But if you were to go to tax court, basically, or argue with the IRS, you can't really quote the frequently asked questions. You got to go to the actual law or some kind of official publication and whatnot in order to argue the position. So the frequently asked questions could be a good source, but they're not a binding source that can really be used in some kind of if there's some question that comes up with the tax position in the future. Back to the text. Implementation of Taxpayer First Act. The Taxpayer First Act, TFA, enacted 1 year ago, constitutes the most far-reaching revision to tax administration since the IRS Restricting and Reform Act of 1998. The TFA included some 23 provisions recommended by the National Taxpayer Advocate. A counterpiece of the TFA is a requirement that the IRS develop 4 strategies plans. 1, a comprehensive taxpayer service strategy. 2, a plan to redesign the IRS original structure. 3, a comprehensive employee training strategy that includes training on taxpayer rights and the role of TAS. And 4, a multi-year plan to meet IRS information technology needs. The TFA required the IRS to submit its comprehensive taxpayer service strategy to Congress by July 1st, 2020. Because of disruptions caused by COVID-19, the IRS has been delayed in developing these plans, but it expects to deliver its taxpayer service strategy to Congress by the end of the year. The report details some steps the IRS has taken to receive input from taxpayers, practitioners, and TAS, and identifies other 24 TFA provisions that the IRS has implemented. It expresses concern that the IRS has not properly implemented a provision directing it to establish a single point of contact for identity theft victims, and that it may not properly implement a provision directing it to exclude taxpayers with adjusted gross income at or below 200% of the federal poverty level from assessment to private debt collection agencies by December 31st, 2020. Collins said, quote, I have been impressed by many ideas the IRS is considering, and I look forward to working with the leadership as it refines its taxpayer service strategies in the coming months, end quote. 2020 filing season review. The National Taxpayer Advocate's mid-year report typically includes an assessment of the filing season that measures performance against the results of prior filing seasons. Because the IRS closed most of its operations in March and postponed many filing and payment deadlines from April 15th to July 15th, this filing season cannot fairly be compared with prior years. The disruption caused by COVID-19 and the postponed due date has had and continues to have an economic impact on the 2020 filing season, reflected in the numbers of returns received, the volume of correspondence received from taxpayers, and the reduction in toll-free telephone service. Among the impacts were, due to campus and office closure, the IRS could not staff phone lines to assist callers beginning the week of March 21st, 2020. So the phone lines were down, so you don't have that assistance that you can have. Again, the idea was because of the social distancing, they took out the phone centers. And then after March 20th, 2020, taxpayers no longer had access to face-to-face customer service. Again, same idea, social distancing, face-to-face customer service removed. There's a large backlog of incoming mail, about 10 million pieces of mail, tax returns, or correspondence sitting in trailers at our IRS campuses. Same kind of scenario. Now we got the mail. They're trying to get everything to be done electronically so people don't have to be, in one place to work through the information. So the IRS could not process paper returns and process or respond to other written correspondence from taxpayers. The IRS has sent only a very limited volume of outgoing taxpayer correspondence. There was substantial reduction in volunteer income tax assistance, tax counseling for elderly and low-income taxpayer clinic services. The National Distribution Center was shut down, depriving taxpayers of a means to acquire pre-printed forms. Because of the IRS's limitations and the postponed filing deadline, an assessment of the filing season is necessarily incomplete. The report says TAS may provide a more thorough analysis later. Other TAS areas of focus for fiscal year 2021. Beyond COVID-19, the CARES Act and TFA implementation, TAS continues to advocate on a broad range of issues. The report describes 10 issues TAS plans to focus on during the upcoming fiscal year. These include working with the IRS to provide taxpayers with limited English proficiency meaningful access to tax products and services, improving the clarity and content of IRS notices and correspondence, improving service to and communication with taxpayers in rural and other communities that lack high-speed internet access, and working with IRS to refine its screening filters so fewer legitimate tax returns are flagged as potentially fraudulent and cause refund delays for affected taxpayers. IRS responses to National Taxpayer Advocate Administration recommendations. The National Taxpayer Advocate is required by statute to submit a year-end report to Congress that makes administrative recommendations to resolve taxpayer problems. Since 7803C3 of the Internal Revenue Code authorizes National Taxpayer Advocate to submit administrative recommendations to the Commissioner and requires the IRS to respond within 3 months. Under this authority, the National Taxpayer Advocate annually transmits to the Commissioner all administrative recommendations proposed in her year-end report for response. The acting National Taxpayer Advocate made 78 administrative recommendations in the 2019 year-end report and then submitted them to the Commissioner for response. Of those, 59 were made in the, quote, most serious problems, end quote, section of the report. the IRS has implemented or agreed to implement 41 or 69%. The report made 19 administrative recommendations. In other sections of the report, the IRS has taken the position that it is not required to respond directly to them and has provided only general narrative responses. The National Taxpayer Advocate believes that the IRS is required to provide direct responses. Quote, "The intent of the statute is clear," end quote. The report says, quote, "If the National Taxpayer Advocate makes an administrative recommendation to mitigate a taxpayer problem, regardless of whether or where it has appeared in a report, the IRS should evaluate it and respond in writing so that TAS, Congress, and the taxpayer public know whether the IRS plans to implement the recommendations, and if not, why not. General narrative discussion that do not address recommendations directly fail to satisfy this objective," end quote. The IRS responses are published in full in an appendix to the report. The National Taxpayer Advocate is required by statute to submit 2 annual reports to the House Committee on Ways and Means and the Senate Committee on Finance. The statute requires these reports to be submitted directly to the committees without any prior review or commitment from the Commissioner of Internal Revenue, the Secretary of the Treasury, the IRS Oversight Board, or any other officer or employee of the Department of the Treasury or the Office of Management and Budget. The first report must identify the objectives of the Office of the Taxpayer Advocate for the fiscal year beginning in that calendar year. The second report must discuss the 10 most serious problems encountered by taxpayers, identify the 10 tax issues most frequently litigated in the courts, and make administrative and legislative recommendations to resolve taxpayer problems. The National Taxpayer Advocate blogs about key issues in tax administration. You can subscribe to receive the National Taxpayer Advocate's blog. About the Taxpayer Advocate Service. The Taxpayer Advocate Service, TAS, is an independent organization within the IRS that helps taxpayers and protects taxpayers' rights. Your local advocate's number is in your local directory and at Taxpayer Advocate Service. There's a link to that here. Contact us. Back to the text. You can also call TAS toll-free at 877-777-4778. TAS can help if you need assistance in resolving an IRS problem, if your problem is causing financial difficulty, or if you believe an IRS system or procedure isn't under the Taxpayer Bill of Rights. Go to this website. There's a link to that here. You can get updates on tax topics on this website here. There's another link, few links to the website. There'll be a link to this in the description.